We talk about taxes in the Netherlands. You pay tax on your income, but the ownership of a house has a special rule, a special way of being calculated in that tax system. Particularly, the mortgage could be deduced from the income. But now about the situation that an international comes to the Netherlands and still owns a house in another country. I can imagine that tax-wise that has some consequences.
Yes, because that's part of your assets. So you report this in box 3 for the value of that property. Normally in box 3 we always look at the value some asset had on January 1st of that tax year. Now for Dutch properties this is made relatively easy because you get the WZ value every year. So you have a new value every year from exactly that date that you need to report for. Yeah. This is often not available for people who have a property abroad. In that case we always just say you get the closest official value as you can get. Like if it was taxed a couple years ago and you still have the value that was given then that you can use. You don't need to have that done every single year to give the value. And another very important aspect of properties abroad is that almost all of the time these properties are not taxed in the Netherlands because we have tax conventions with all these countries, and basically wherever this property is located is 99% of the time also where this is taxed. So you report it in the Netherlands because you need to report everything here. But then you can also claim double taxation relief for that property to exclude it from the tax calculation. But you do need to report it.
Which would be particularly the case for the internationals who still own a house there, and then it depends a bit on the country. And for the Dutch nationals who want to have a second home somewhere in the Mediterranean area, move the money outside of the Netherlands?
Well, that would also count then, but do keep in mind that it will most likely not be taxed in the Netherlands. So it will be taxed in the country where it's located. That also means that you will most likely create the obligation to file a tax return in that other country, purely because you have a property there that needs to be taxed, most likely through their income tax system. So yes, you avoid the Dutch taxes on that, and if they are really disadvantageous compared to compared to the country where that property is, then yes, it might be worth it. But do keep in mind that you're most likely creating the obligation to file a tax return there purely because of this property.
Steve de Bokum of the Expat Service, giving advice in general, but also in particular to the internationals. Thank you, Steve.